Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Breaking news this morning. It's why I am just running a few minutes behind time as I was preparing some information, checking sources, listening into what's going on. Expect a rally, a continuation of rally, but then a potential sell-off and fears and all the rest of it. Why? Because China have just bailed out using the Bank of China, the People's Bank. So get ready for some volatility. Get ready for opportunity to buy in China. BABA, stocks like that. Chinese stocks are moving today. Stimulus checks, money flying around, the money printer back on. Rates being slashed, but it could affect what's going on here in the United States. We'll cover all of that as we get into the show. Once everybody comes in, we will cover all of that. So there's a lot to unpack today, a lot to be prepared for and wary of. So don't chase the market. It's always been my message to everybody. Don't chase the market. Investors are already in. Let everybody do the chasing. Wait for the pullbacks. You're already in. You're only buying macro dips and the drops as they return. You're already invested. You're fully invested. So we're going to wait and see how this plays out, but we will cover all the news in a few moments. There's a lot to talk about. So let's make sure everyone is here. So click subscribe and ring the bell and tap a like if you can. That would be absolutely fantastic. Let me see who's here this morning. Welcome everybody in. Who have we got here this morning? We've got Lucas A's James 007. It's time for a refreshing cup of tea. It is, James. Cheers, mate. Thank you very much. Lovely. Thank you. Good morning, peeps. Good morning to you, David Ewan. Screw China. Hope we aren't bailing them out. Well, it does affect what's going on here in the US. We know we are a global community, so we can ignore the world, but it kind of, does all bounce off each other. But anyway, we'll talk about how it affects the United States in a few minutes. All right, we're going to just welcome everybody in. News is breaking as I'm making this, so there's all sorts going on at the same time. So let's keep our eyes down. Rick McGrath, good morning. Okay, Rick McGrath, you posted a comment this morning in Discord saying you woke up this morning and you had $50 from Robinhood, and I asked, what was it all about? How did you get that? Let me go and have a look. Let's have a look. This is what you posted this morning. You woke up with $50 from Robinhood. I asked, what was it for? Way back, I seen something about getting gold and deposit 2,000 and get 50. I never deposited 2,000. They must have counted funds in my account. I've never seen that. Way back, I seen something about getting gold and deposit 2,000 and get 50. I never deposited the 2,000. They must have counted funds in my account. You earn cash from Robinhood. I don't think it's that. The only thing I can think this is, you've not got $50 because of a referral, because it would say, because you'd get stocks. I think your reward, I've never seen this. This is something really new. If you could find out what this is, I've seen something about getting gold and deposit 2,000. I still don't know what that is. I'm interested to let everybody know how they can, do the same thing. But I've never seen that. The only thing I was thinking it could be is cash back from your debit card. Do you use the Robinhood debit card because you earn cash back from that? But it's weird that it doesn't say. In your information, if you click this, I'm sure it would actually go into more information and tell you what it is. But I'd like to know. It'd be interesting to know. Anyway, if you can go and let us know, that'd be good. But I'm unclear what that is. Anyway, let me just clear everything there. Make sure we're up to date on Discord. Yeah, we are. Okay. We're going to discuss the China situation in a minute. Good morning. Good morning, Lance Strength. Moroccan mint tea is the best ever. Moroccan tea, no, it has to be normal English tea with milk, I'm afraid, for me. Let me listen into this a minute. Look at this. CNBC is really unreliable with the streaming on web. It's really rubbish. It stops all the time. I don't know what it is.
About is actually that other countries are going to say, well, we don't want your exports, or we're going to tariff your exports. And so that it creates this sort of a race either to the bottom or to the top in terms of cost.
We're going to look back at that in a minute. Hopefully we can get that to work more reliably today. Give us some red, says Songs for Space. Good morning, guys. Martyn, just to admit, you're too scared to cover... I'm too scared to cover the earning. Oh my God, not this again. Yeah, I'm terrified. I've covered hundreds of earnings, and I'm terrified to cover the earnings. Donald, yeah, okay. I'm very happy to cover the earnings call. No problem at all. I'm not scared about it. Why would I be scared about it? I don't lose money. I don't invest in rubbish. I don't short stocks. I don't do options. I'm always hitting all-time highs. Yeah, I'm terrified, mate. I'm absolutely terrified. Look, I'm about to hit another all-time high, 119,766. You're right, I'm terrified. What is it I'm scared of this morning? Hi, Ivan. It's getting boring with these little green days. Need some volatility. Yeah, every day we just make money. It's boring. Yeah, looks like it's part of the 1% deposit match. It's paid out monthly, I think. Looks like it's part... No, it wouldn't be that. It wouldn't be that. I do the 1% match, and I'm currently earning about $8 a month. It gets spread over 2 years. If he'd earned $50, if he'd have earned $50 this month, he would have put in hundreds of thousands of dollars, and I don't think he has. Because I've, you know what I've been putting in every month, you know, a couple of grand, a couple of grand, and I'm earning about $8 a month. It's 1%. It's paid out over 2 years. So it's not that. It's not that. No, it's not that. I see if you sign up for gold and deposit 2,000 in Robinhood, we'll reward you. Oh, if you sign up for gold and deposit 2,000, we will reward you $50. Okay, must be that then. It must be that because I didn't get that because I've been gold for a while. So that's obviously a gold promotion. Fantastic. So everybody, if you want to get $50 and you've not signed up for gold, you might want to do it. There's an account transfer bonus when you transfer an IRA. There is, but again, it's 1%. That wouldn't be like that. I think Rick McGrath has got it right. It's for signing up for gold. Trolls already in here. DJT earnings call will suck, but become a member, Donald, and super chat him. He will cover. Put your money where your mouth is. I certainly will. $5, I will cover the earnings if I'm not already doing it. Hi, everyone. Mike, good morning. Hi, Lance, good morning. Good morning, Stacey Bailey, Fight Channel. I know why you got the 50 from Robinhood. Well, go and tell me then. Good morning, everyone. Don't tell me it's dividends. Martyn, that was a joke. I was being... Oh, okay. Sorry, Donald. Yes. Again, we don't... comments can be very easy to misunderstand. So, Martyn, that was a joke. I was being... Thank you, Donald, for explaining. I was worried then for a minute. I thought, hello all. Another day, another dollar. Absolutely right. Okay. Let's get into it. We've got some news this morning, so we're going to get straight into our Chinese news this morning. And we're going to cover it in a couple of seconds. Just bear with me. Big morning this morning. All right. Okay. Let's get into it. Okay, so... Right. China, as Mr. Trump would say. China, and the time is 9 minutes. 9 minutes. We'll call it 10 now. Excuse me. Right, here we go. Breaking news here on Martyn Lucas Investor. Chinese bank, the People's Bank, rescued the economy, or has it? The money printer is on. Rates have been slashed. Stimulus around the world. BABA is moving up. Chinese relating stocks are moving up. Why do we care in the US? Well, we should care in the US because it will affect us. It could send inflation back up again. All kinds of stuff. Shall we talk about it? Yes, I think we should. We'll start by looking at where we are this morning. As you can see, I'm breaking all-time highs again. As you can see, my portfolio is up again. We're beating the market again, and 119,766 all-time highs again. No options here, no shorting stocks, no pumping and dumping. I simply own the S&P. I'm all invested. Every penny I have is in Robinhood. Robinhood is my bank. It's how I pay for things. It's my bank. And I buy the macro dips when it goes down 10, 15%, and then I use margin, turn it on. That's it. Very simple strategy. And I've been consistently making money. I never lose money. At least I haven't since I rebalanced my account back in January. And I'll never lose money again. I spent the first 2 years learning the ropes, and now I don't lose money. I will never lose money. Let's talk about what's going on with China. If you'd like to tap the like button, that would be great, and consider subscribing. But basically, overnight, what's happened is the markets are stimulated, not just here in the United States, but all around the world. Let me share with you what's going on. So, I'm bringing up the heat map. You can see the heat map. There it is. Let it just warm up a little bit. As you can see, Apple's up. Most things are neutral. Not a great deal at the moment in the United States. We are up slightly, but not a huge amount. But let me share with you the global markets, which for some reason, why can't I see it? Oh, I know it. It'll be in there. We'll come back to that in a minute then. All right. Just take my word for it for a minute. I'll come back to it. But the global markets are all up on this news. Essentially, what has happened is this. And be very, very careful. I have put a warning out this morning. I've said it's a China emergency bailout, and I have included the word warning because it's a warning if you are chasing Chinese stocks. It's also a warning if you're chasing the rally right now. Let me explain what's happened. This is the Chinese version of Jerome Powell turning on the money printer. Essentially, that's what's happened this morning. And the money printer is back on again. I think I've got a nice little thing here, haven't I? Have I got a nice little thing here? There you go. Here's my money printer. There we go. The money printer is essentially back on again this morning over there in sunny China. What that means is the Chinese economy has been struggling for years, a lot to do with their real estate as well. You've seen all the images of towns with half-built houses, people basically priced out of the market, run out of money, houses half completed. Chinese economy is in a right state, and this has been going on for a while. And the Chinese people are not easily convinced either by it. They've been given bailouts before, and they've been very concerned about it before, and people are very, very fearful. Not like in the US, we get a bailout, we get stimulus checks, and we all start spending our money. In China, they're a little bit more reserved on it, so they're harder to convince. And of course, anyone who talks against the Chinese government can be arrested. So there's all kinds of issues going on in China. But essentially, the People's Bank has turned on the money printer, but something else has happened at the same time. It's a multiple attack. It's not just turning on the money printer, and where is the money going, and where is the stimulus checks going? I'll explain that in a minute. Not to the people. I'll explain how it works. But also, they're reducing and slashing rates as well to basically encourage people to spend, encourage people to borrow, encourage people to lend money, and get the whole economy moving again. But of course, actions like this don't always end well. You know, you can't just fix things with turning the money printer on. Hang on a minute, we've been doing that in the United States forever, and we seem to keep going up. Maybe we can until we can't. Well, essentially, they've turned on the money printer and they've given out lots of free money. Now, where's the free money gone? How does it affect the United States? How does it affect BABA? Well, we're going to talk about it in a second. But essentially, they've started by giving money to institutions and brokerages, literally giving them literal stimulus checks. And what it's done is it's encouraged the world today to rally up. Now, this typically, a rally like this and a stimulus like this typically lasts 7 days to a week, and then it'll go sideways and then go again. Now, this is great news initially, potentially, maybe, with a big warning for those of you in the United States, but don't chase it. As an investor, you should already be in. I'm already in. I'm enjoying this now, waiting for a pullback. Just don't do anything. You're already invested. Investors leaving their seeds in the ground are loving it. Traders will get their hands burnt because greed will always bite your hand off. Essentially, what's happening over there in China, and we'll cover the details in a moment, they're giving stimulus checks to institutions and brokerages and businesses to buy back their own stock cheaply, all right, with very cheap money. They're also giving you money to brokerages to buy the stock market, literally to pump the stock market. They're not handing out money to the citizens, to the people of China, not like they did in the US. In the US, they gave people money and people spent money like crazy. They're not doing that in China because people would be a bit more reserved and a bit more like, I'm not sure what to do with this. So they're giving it to institutions and businesses to buy their own stock, to pump the market. And we're going to give you some evidence of that in a moment and show you how it might affect us and where it goes from here. So be very, very careful if you're chasing it. It's great for me as an investor because I'm making all-time highs all the time. And I'm about to hit $120,000, which means I've got $200,000 now invested, which is amazing, right? Can't believe it. Anyway, let's go and show you some details. And then we're going to discuss BABA. And you might want to try investing into some Chinese stocks. Remember, they've been down recently. Now you've got a rally. But first of all, let me give you this headline. This is just out. Just an hour or so, a couple of hours ago, actually. China moves to boost ailing economy with property stimulus measures. All right. Chinese official authorities unleashed unusually broad measures designed to inject momentum into the world's second largest economy, announcing on Tuesday the most significant stimulus package since the pandemic struck almost 5 years ago. So this is very, very significant. This is not the normal stimulus. This is not just handing out checks. This is also reducing rates and encouraging businesses to buy back and encouraging people to invest in the stock market. It's a multi-pronged attack. Does it suggest that Xi Jinping has now realized how bad the Chinese economy is? Is it good for the US? Well, we'll get onto that at the last part of the video. These measures, which include cutting interest rates and supporting the beleaguered property and stock markets, come amid signs the Chinese economy will miss the government's growth target of 5% this year. The decision by the People's Bank of China to cut its benchmark interest rate comes less than a week after the US Federal Reserve cut interest rates by 0.5 point. Now, this is important because we could have a race now to the bottom. Both economies could be racing to drive interest rates down, and then we could get a Paul Volcker. We could get a spike in inflation. So again, you're already invested. You're not chasing it. You're letting it rally. You're enjoying the increased dividends that you're going to get from the S&P. You're doing nothing, all right? You're waiting for the pullback. Enjoy the rally. Do nothing. Don't chase it. Hungry people are chasing stocks today and they're going to make mistakes. I'm not, and I'm up, and I'm loving it. The decision showed China's central bank has shifted from a hang in there until the Fed blinks stance, said Larry Hu of Macquarie Group, to one of fight deflation now. Is it their problems are worse? Yes, their problems are a lot worse, but how does this affect America? We'll come to that at the end of the video. While much of the world has been battling inflation, Chinese authorities have been struggling to boost demand and stem a fall in prices amid widespread gloom about the economic outlook. Today's policy announcements are more positive than expected, although this alone may still not be enough to end the longest deflationary streak since 1999. Hugh wrote in research note, but it could be the beginning of the end, as it signals the rising urgency among top leaders to fight deflation in China. Okay. Recent data has revealed the Chinese economy is slowing faster than expected. Growth in industrial output and retail sales have slowed, while the stock market and investment in real estate took a nosedive. Unemployment is up and deflation remains an urgent issue. Okay, I covered all that at the beginning. I'm going to show you some stocks in a minute that you might be concerned with. Chinese ability to achieve this year's growth target of about 5% is now in doubt. Goldman Sachs and Citigroup have cut their projections for the Chinese economic growth this year to 4.7%, while Morgan Stanley expects 4.6%. And you can see the little graph just there. The coordinated stimulus measures announced Tuesday marked a departure from financial authorities' previous approach to drip feeding piecemeal support, measures. Julian Evans, Pritchard and Zitsham Huang of consultancy Capital Economics wrote in a note, it was the most significant stimulus package since the early days of the pandemic. Okay, but on its own, it may not be enough. It will probably be insufficient to drive a turnaround in growth unless followed up by greater fiscal support, they wrote. Still, markets reacted favorably to the new China's benchmark CSI 300 stock market index and Hong Kong's Hang Seng index both rose almost 4% on the news, hitting a level not seen since the start of 2022, while the Chinese yuan reached a 16-month high against the US dollar. We've seen how the US dollar has been recently affected against the pound as well. If you go into the UK right now, it's becoming more expensive, whereas if you're going from the UK to the US, it's great that way round. All right, so understand how the dollar is bound to go down because rates are going down and the dollar is becoming less attractive. Pan Gongsheng, governor of the People's Bank of China, said the new stimulus measures were designed to support the stable growth of the Chinese economy. Now, there's nothing we want more than a strong Chinese economy. It's not like in the US, we want the Chinese economy to crash. We don't. However, we could have a race to the bottom now, and if we're not careful, this could increase inflation again in the United States. However, the way that the Chinese government are doing it this time, rather than giving people the money, because they know that doesn't work, they're giving businesses, brokerages the money to buy the stock market, not directly to invest in the business, but to buy the stock market, to raise prices. That's good. It makes it look attractive. It looks like people want to invest in the US companies. Not building them out, because if we build them out, we could ignite inflation, but just to buy the businesses themselves. An important factor to consider is that we need to promote a moderate recovery in prices, he said at a rare news conference in Beijing on Tuesday, where he sat alongside the heads of the National Financial Regulatory Administration and China Securities Regulatory Commission. The PBOC cut its benchmark rates from 1.7 to 1.5. There you go, making it cheaper for households and companies to borrow money. To further encourage lending, the PBOC said it would cut the amount of cash that commercial banks were required to hold in a reserve by 0.5 percentage point, potentially unleashing $142 billion in new lending. It signaled it could cut the reserve requirement ratio by the same amount again by the end of the year. Now, we are expecting more rate cuts in the United States as well. This is where I'm talking about we could have a potential race to the bottom. Now then, as you can see, the markets are rallying at the moment. I want to share with you the markets around the world. You can see here, there you go. The Nikkei is up 0.27. Hang Seng is up 4.13. You can see things moving. The FTSE is up in the UK. That's the Financial Times Stock Exchange, up. And of course, we're not open yet. We've got 29 minutes, but expect the markets to open up this morning. The ones at the top there is New Zealand and Australia. I just need to add China into there. I've only got Japan for some reason, and Hong Kong. I'll need to sort that out later. Anyway, right, what we're going to do now is show you how this affects the US and how you might want to invest in this if you're buying Chinese stocks. So let me show you, first of all, if we go over to, we'll keep on our main position, but BABA, this is one of the most popular stocks that can benefit from this. Look at that. Alibaba. All right, it's up today, 5.96. A nice rally. I still wouldn't buy it. Absolutely would not be chasing anything today. I'm an investor, not a chaser, not desperate. Money comes to me. I don't chase money. Never, ever, 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 ever lose money. Rule number one. Number two, remember rule number one. It's very straightforward, really. If you never lose money, you'll always win. It's easy. The hard part is to keep your money. Making money is easy. There's the portfolio. We're about to hit $120,000, which will be another all-time high. This is an all-time high. But let's have a look at BABA right now. Is it worth buying today? Can you take advantage of this? Well, hopefully you've tapped the like button so far and you've considered subscribing to the channel. But let's have a little look. Let's have a look at BABA this morning into some more detail. I'm not going to cover what the stock is. This isn't about that. This is about the movement of the stock. I think we all understand what BABA is. But let's look at it, all right? The valuation. It's currently undervalued by 28%, and it's a reliable. We have no DCF warnings here or nothing like that. It's regarded as a decent valuation, $125. So we are 28% undervalued. Now, this rally could continue. We do expect this rally to continue. So, you know, it's good. We can expect it to continue for about 7 days, then consolidate, and then go higher. This isn't a flash in the pan. I'm not expecting this just to go up and back down again. I am expecting it to go up. That doesn't mean to say I'm going to chase it, though. Just because I expect it to go up doesn't mean I'm going to chase it. Best case scenario, undervalued by 52%. Worst case scenario, overvalued by 10%. I wouldn't be concerned about that, though, all right? Okay, scroll on down. Let's look at the state of the business. Is it worth buying? Well, the revenue is up 1%. Not really growing very much. It's kind of flatlining. It is moving, but and some of our businesses, we don't mind. Remember, this is in... this will not be in US dollars. Remember that. These currencies will be in the local currency. All right, just remember that. Okay, it's very, very important. Operating income is down 14%. Net income is down 13%. Financing cash flow up 5%. Investing cash flow is up 222%. Operating cash flow is down 6%. Let's look at the balance sheet, though. 1.8 trillion in assets again, and I repeat, these are in local currencies, of course. All right, so to just understand that. 1.8 trillion, and we've got the assets there, of which cash is 448 billion. Decent amount of cash there. Liabilities, long-term debt, 178 billion. 21% of its liabilities are debt. That's manageable. But the liabilities, it's actually not a bad balance sheet so far. So far, it's not a bad balance sheet. But look, gross margins are all falling down. Will the stimulus check help it put the price up? That's very all well and good. But then if the price keeps rallying, but the business doesn't grow, essentially, what's the point of that? I'm not so sure. But anyway, I wouldn't be chasing it, like I've said. Please tap the like button. We've got 112 watching, just 32 likes at the moment. Let's get 100, and then YouTube will suggest this out. It's a big day today for investors with the Chinese market stimulating the economy. I'm making this video during a live stream, so it would really help if everybody jumped on the like button. Anyway, 38% gross margins and falling. All right, we were up around the 63. Let me just bring that onto screen. We were up to 66, 67, 68, 72. We've been falling. No one's spending in China. Operating income, 11%, 444. I mean, it was up like, look, 46% all the way down. These aren't good numbers at all right? It's not a strong business. There's no moat here. There's no room for error. Everything's falling down. FCF margin down. RO, I mean, all profitable, but declining all the time. So just be very, very wary of this business, all right? The Chinese government are trying to stimulate it, but that doesn't mean to say you should buy it, all right? Some of you will, of course, you'll think this is great. I won't. 53% profitability, falling, don't like that. Balance sheet, 57, not bad. It's not going to go bust anytime soon, but be very, very careful if you are chasing it. 11% downside, worst case scenario. On average, 22% on the upside, 70% on the upside at best. Are we best? No. At best, we're average. I would rather know I'm going to make 13% a year on the S&P, and with my macro dips buying, increase that to 20%, which is what I'm doing. 20 to 30% a year I am making on the S&P by buying the macro dips. That's what I am doing. So I can outperform this. I wouldn't risk it. I don't need to. I've got a good dividend. There's no risk. There's nothing here for me to jump on in. I'm not a fan of jumping onto Chinese stocks at all. Do we have a short interest to show you? It doesn't look for some reason like I do. I'm sorry for scrolling up and down. No, I don't. Okay, let me come back to Baba a moment. There you go. You can see it's still rising. So we've talked about the opportunities for you. We've talked about what's going on with the economy in China. Now let's talk about what you can do as an investor in the United States. All right. Let's come back over to here and show you my portfolio. We're rallying today. We're going to get a rally. We're going to head to a Santa rally. This is good news if you are an investor. I don't think it's good news if you're a trader. And I'll tell you why. There's opportunity to be made. Yes, no doubt about it. Buy the rally, dump it, whatever. But if you're doing short-term gains, you're going to pay tax. I know you could do it on your IRA and do it tax-free. But just be careful. I think it's an opportunity to stimulate the market and just remain in and do nothing. Remember, just because you can trade doesn't mean you should trade. And I don't really feel that this is a good opportunity. I don't think this is a good thing to jump in. It's very, very risky right now. But if you are an investor, you'll stay where you are. You'll enjoy this. There'll be some pullback eventually as we go into the election. Then there'll be a rally. And all you're looking for, like me, if you're a long-term investor, you're looking for an overnight flash crash, which will come. There will be a correction. There will be a flash crash. And remember, it doesn't have to happen for me. I'm already fully invested. Every penny I have is in. But if I'm going to keep reducing my margin, which I'm doing every month, I'm building in more and more buying power that I can use. I'm looking for a flash crash. I'm looking for a correction. That's when I'm going to buy. I don't buy the pumps. I don't buy the rallies. I don't chase the market. I let the money come to me. It always does, always will. As George Clooney once said in Perfect Storm, the fish will gather again for the Andrea Gale. Didn't work out for him so good, though, got to be honest. So not a good analogy, but you get my point. So be very, very careful. But that's what's going on today in the economy. The money printer is on for China, and it's stimulating all markets, stimulating Chinese stocks. Be very careful. But good luck to everybody. Click above my head for all the links down below in the description. Over here, I'll put more videos that might interest you. And I've just done why cash is not king. And I prove it to you. I think if you watch all the way through, but at the end of the video, I will convince you that cash is not king. Remain invested. I'll put that down there. Until next time, as always, take care of yourselves and each other. All right. Let me finish my tea. Okay. This is so annoying. This is so annoying that this keeps freezing all the time. Anyone know why that is? CNBC is just freezing all the time.
Although the multiple remains
22.
Yeah,
22, 23. We talked about this yesterday. Given the fact that it's up 60% this year, it's really kind of exciting because you actually have a company here that had a very rough patch around virtual reality. Of course, the metaverse has pivoted in all respects, I think, excellently towards back to AI.
Back to well, you had the year of
with an
efficiency in the
outstanding
middle
offering.
there as well. So you had significant job cuts, which were certainly embraced by many investors. And then to your point, obviously the pivot to AI, still called Meta. Some very positive stories of late about their sunglasses as well, and what they can do, Sarah, in terms of being able to take pictures. Very good for people who create content, for example. Take videos. I don't know if you have a pair.
I don't.
With the kids. I don't actually know.
No, I don't.
Well, it's this Meta AI thing that's really kind of
We
amazing.
got just over 15 minutes to go before the bell goes.
Go into all of their products and essentially be able to ask. So you can go down Facebook now and just have a Meta AI overlay and really help you answer questions. That's
Tan
to me,
Pek
it's really
Hong,
remarkable.
good morning
That's
to
right.
you.
Well, the idea that you'll have these glasses on and I can look and they'll tell me everything I need to know about Bob.
All-time
Not that I
highs
don't
once
already,
again.
but of course,
I'll tell you what we'll
yes, I
do.
probably
We'll
do.
put a nice
I
big
wouldn't
cheer
And in
when
the
we
voice
hit
of Judi Dench.
120,000.
And the voice of Judi Dench, right?
Yeah. Here's the celebrity voices for Meta's AI chatbot. It's an eclectic mix. John Cena has a ton of fans. Look, there was a note.
I love John Cena. How can you not? He's great.
There was a note from Citi this week actually saying that where estimates were taken up because of
Good
some
morning,
Citi proprietary
Savage.
data they were looking at for Reels and the video service of Meta saying.
Good morning, Martin. Hope you have a great day. If you were afforded lots of time in the market, would you focus on dividend growth over share price growth for individual stock investing? Let's have a look. Hope you have a great day. Thank you. If you were afforded lots of time in the market, would you focus on dividend growth over share price growth for individual stock investing? Well, it depends on your aims and your goals. Essentially, depending on your age, we all have the same goal, really, right? You might have different levels, but you all have essentially the same goal. You all want to make a certain amount of money by a certain time, but we all essentially want to just get to a certain point with excess money that we can live on, essentially. You've got to, Fight Channel will disagree with me, and if you join us on a Friday, we can discuss this with Fight Channel, because Fight Channel is all about dividends. It's all about dividends. For me, it's all about growing a stock and then dividends, because dividends can become a tax-free passive income. Right now, I want to grow my portfolio, make $1 million, then the $1 million will go into a high dividend cash payout. But you first of all want to grow your position. So for me, dividend payouts are generally considered, dividend portfolios are generally considered for older people in their 50s. Oh, if you've already retired at 40, whatever. But yeah, 50s, 60s, 70s, 80s. As you get older, dividend payouts become more and more attractive. When you're younger, you can afford more risk. You're growing your portfolio. You're trying to amass amount of money invested. Then you use that money to buy dividends. Because remember, if you've got a high-paying dividend stock, the value of your portfolio is going down. Depends how you use the dividends. You see, Fight Channel uses his dividends to reinvest. I'm not convinced it's the best way, but it's the way he does it, okay? Dividends were designed to provide you with a passive income to live on. Yes, you can reinvest it, but if you want to grow a portfolio, that's what growth is for. In my opinion, Fight will disagree with me. He'll say, "No, I like my, I like my dividends," and we'll see in time who grows the highest portfolio and whatever. But we'll see who gets to $1 million first, I guess. But for me, when you're starting out, you're building up a portfolio. And If you want a couple of rights on the sidelines, earning some dividends, why not? But essentially, you're growing a portfolio to a mass amount of money, and then you use that to start to filter in as you wish, as you get older and you want to provide yourself with a passive income. I don't think that should be the focus when you're younger. I don't think that's what it's all about. But anyway, you could, I'm sure you might disagree, or I don't know. But yeah, that's how I look at it anyway. Cheers. Morning, everyone. Omran, good morning to you. How you doing, James? Robbie Cooper. I sold my Intel shares earlier and bought heavily into Bidu, B-I-D-U. Thank you. Good day, Martin. Charles Kahi. I'm doing well. Thank you, Omran. Thanks, man. Great day. Enjoy your tea. Right. Are we about to hit another all-time high of 120,000? 109. Oh, look at that. 119,956. Now, I've had 2 months now of paying my interest payments, margin payments, and they're getting cheaper by the day. We're down a couple of bucks now with what I've recently put in, and the rate's falling. They're about to come down by another dollar a day. So this is getting cheaper and cheaper. My portfolio is going up and up. But guess what happens next week? I get my biggest ever dividend payout. It's somewhere in the region of about $650. So I'm very, very excited about that. Can't wait. So looking forward to that payment. Of course, that is a taxable gain for what I earn in my brokerage, not what I earn in my Roth. Of course, that'll be tax-free. But of course, what it will do in my IRA, when it pays my IRA, let's come back out of Alibaba just for a moment. When it comes into my IRA, it'll sit there and it'll wait for the macro dip. It'll wait for a macro dip. There's no point chasing the market right now. It'll sit there in cash. It'll earn a bit of it. Will it earn any interest? No, it doesn't, does it? I don't think, no, your Roth doesn't earn interest. Of course it doesn't. It'll sit in my cash, and then when I get a little drop, or whatever, but I will just use all the cash and just spend all the cash with just buying the S&P. And it doesn't matter if I buy an all-time high. I'm going to be buying an all-time high in January when I get my next $8,000 to be able to start the new year. So, you're going to be paying an all-time high anyway. What I tend to do is the 31st of December, New Year's Eve, at midnight, I drop $8,000 at 1 minute past midnight. That's what I've done the last 2 years. I don't care about what comes the next coming days. I just go, boom, I'm in. Remember, for me, it's all about time in, not time ing. That's the way I look at it. So you might see it differently, but anyway, that's how I see it. What's going on here? This is really driving me up the twist. I'm not able to. I need a mirror screen. I've got an idea. I could have a mirror. A little bit of creativity here. I could have a mirror running, because that's what's happening. Let me see if I bring this in now.
With the Committee on Policy Solutions to address the structural issues that harm patients to drive up costs, and that Novo will never stop working to cure diabetes and obesity. What's not in here, though, is a direct acknowledgement of the price of Wegovy and Ozempic in the U.S. versus other countries. Senator Bernie Sanders pointing out that obesity drug Wegovy goes for $1,300.
Okay, I thought it was something else. Yeah, I'm going to see if I can... Anyway, I'll think this through, because this running two CNBCs isn't working. Anyway, ignore me. I'm just thinking out loud. We all look for financial freedom. We all do. Martin, how will you create passive income with the 1 million when you get there? Well, essentially, when I get to $1 million, I will have no margin. I will be earning uninvested cash on the money I continue to earn after that point. Remember, I will then be earning dividends. I'll be earning somewhere in the region of about 1,000, no, more than that. Blimey. 200,000. I'll be earning a few thousand. Hang on. Trying to get. It's hard to calculate. I'm just doing it roughly in my head. 200,000, $600. So that's 2 times 5, 3,000. 3,000. I'll be making about $1,000 a month in dividends. That'll be my income. Without selling any stocks at all, I'll be earning 12 grand a year without selling anything, just on passive income. 12 grand a year. But my portfolio will still be growing by 10% a year. So what I could do is take the $12,000 a year. That's free money. That's just free money, plus the 10% a year, which will be about 100 grand. But then I would just, take a bit of that. So that, I will sell the odd share, and I will, but as much as possible, I will live on the dividends, essentially. But anyway, when I get to $1 million, I'm still going to keep earning money, and the portfolio is going to keep growing. So I haven't thought that far ahead yet, but I will. At some point, I want to talk to a CPA and talk about things like moving into trust and stuff like that. But anyway, Martyn, does being a green card holder, prospective US citizen, makes these CME Bloomberg people waffle more tolerable? That's good. I like that. Yes, it does. Oh, by the way, so me and Leah are going to go for it. I'm going to apply next year to become a US citizen. All right. Next year, I'm going to apply to become a US citizen next year. So what does everyone think about that? Next year, I'm going to apply to be a US citizen. Shall we? Have we got time for this? We got time for this, have we? All right. Oh, say, can you see by the dawn's early light what so proudly we held at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight? Oh, the ramparts we watched were so gallantly streaming, and the rockets' red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say, does that star-spangled banner yet wave? Oh, the land of the free and the home of the brave. There you go. I hope you'll all support me in my mission there to become a citizen of the United States. We're going to start it next year. It's a bit expensive. It's very expensive to become a green card holder, and it's equally as expensive to do a citizenship. But I feel now I could afford potentially to start the process. So there you go. I will do that. Anyway, right, we've got 5 minutes to go. We're watching the markets. We're keeping an eye on everything very, very closely. So someone just said they enjoyed my music. So if you do enjoy my music, there is my music channel in the chat. If you click on that, subscribe to me. I'm trying to raise millions of dollars by getting to 10,000 subscribers, because then YouTube will turn on charitable giving. Please do subscribe to me and help me grow, and then join our concerts on a Friday night. We do concerts every Friday night, and if you want to go and hear me sing like that on the football fields of United States football United States football fields, go and check it out. I've done all kinds of stuff like that. If you want to become a member of the channel, there's the membership. There's the X account if you want to do that. There's the all links button for your birthday card, your Christmas card. There's Discord. Become a member. You can be part of the main show. All right. Wow, your voice is great. Thank you very much indeed. Towards the cost, the citizen cost. Wow. Hey, Leah. We've got $2 towards the cost of citizenship. I will put that towards it. I absolutely will. I'm starting to save now for it. It's somewhere in the region of about $3,000 or $4,000. I think it's about $1,500. I think for the attorney. And about $1,500, I think, or it's about $3,000 or $4,000, something like that. And I'm going to start saving now, and I will update you with the process when we start. But I think we'll start moving on it. We'll start contacting the attorney that we got for the green card in January, and we'll start the process. So I'm not joking. I will put that $2 towards that. So thank you very, very much indeed. Right, okay, 2.5 minutes to go. We're going to keep our eye on the markets. We're getting ready for a volatile day today. Get ready, just a few moments away now. Opening bell, just a few minutes away. So get ready. Stand by. 2 minutes to go. Lovely music. Thank you very much indeed. Check out my music channel. Click subscribe to that. That'd be awesome. And then you can be part of my music contest every Friday night. You can phone into the show, join in with me. Are we about to hit another all-time high? Have we got time to share it? 120,000. Let's have a look. 119,967. Another all-time high around the corner. Special moment. 1.5 minutes to go. Getting exciting now. 120,000 just around the corner. Remember, I've never shorted a stock. I've never done options. I just own the S&P and buy the macro dips. Very, very simple strategy. Very, very simple strategy indeed. Okay. Hi, Martin. I own approximately 50,000 NVIDIA at 120. Do you think it'd be a good strategy to sell it when it reaches, say, 121, then reinvest 25 in VU and rebuy NVIDIA when it's drops? Look, the classic Kana, I can't predict and tell you what's going to happen day-to-day basis. Nobody can. Anyone who does is just basically talking nonsense. I don't know. You got 50 grand. Is all your money in NVIDIA? Well, you see, I would prefer to own the S&P. It's better value to own NVIDIA. Remember, you own 6.6% of NVIDIA by owning the S&P. You don't get the massive growth, but you don't get the massive drops either, and you consistently make money. You need to phone into the show. If you want an answer to that specifically, you should call into the show, become a member of the channel, call in so we can discuss all the ins and outs of it. I don't know your debt position, your financial position. I've got no idea. All right, you ready? It's time to go over to the New York Stock Exchange.
A jeans collab with none other than Beyonce.
Oh, what is it? Crashed again? This is getting ridiculous. It crashed again, right on the belt. This is no good, no good. Unbelievable. Why does it keep crashing all the time?
Company CyberArk, that's celebrating its 10th listing anniversary. Any broader takeaways, Sarah, on the Levi, at least news?
We've got to sort this out.
I think that it's challenging.
We can't keep going on like this. This is
right
flipping
now,
ridiculous.
even if jeans are popular and they're changing styles and they're doing well, just because inflation has thrown a wrench in consumer pocketbooks and it's made it harder to
Okay, let's
make
go
these
through our
long-term
portfolios and see what's up and see what's down. Let me just, yeah. Here we go. Let's go through it.
The year is 1991. Birds and people are living together in seemingly perfect harmony until one day a young man catches fire. This is Phoenix.
Overall portfolio up. We're not quite at all-time high at the moment. We're just, well, we are, but we're not setting the 120 grand. The S&P is falling down at the moment, but it's up 0.07, but just trimming back. S&P Global is down 1% today. Virgin Galactic is up 1.15. Palantir is going down, very expensive. So it's too expensive. Gold is up. Amazon is up 0.29. Apple is up 1%. And next year energy 84. Enphase Energy is a double to 3x. Coca-Cola, which what that means is defensive stocks are being sold to buy high growth stocks. J&J is going down. Again, the same thing. It's being sold for high growth stocks. Makes perfect sense. I'm fighting the internet today. Don't make it difficult for me. What's going on? Right, J&J. Chevron up today, 0.7. Tesla up today, 1.13, just pulling back a little bit. Rivian going down and down. I just would not buy that. McDonald's up 0.19. Never paid too much for land. Google, still great value. One of the best. Microsoft trimming off today. Nvidia going up again, 0.56. 117 now, just touching 117. 116.85. Going to 210 within 12 months. That's what I think. Walmart is up today. Tilray 171. Robinhood just trimming off this morning. IonQ. I bet they wish they were a Chinese Robinhood. They'll be getting free money this morning. Rocket Lab being trimmed off. Plug Power is up at 1%. Rumble is up 0.22. Funware is up slightly. Ascent Solar down another 4%. Awful. FFIE now under $3. Every day going lower and lower and lower. Rubbish. 63 Bitcoin up today 0.6. I sold it all at 70. I'm out. Don't see any point in being there. And Baba. We're talking about Alibaba this morning, up 6.5%. Chinese markets are surging. There you go. Let's have a look. Rallo1, thank you so much indeed for your super chat. Appreciate that a lot. Love your music song. Thank you. Hi, Martin. I own approximately a classic car nut. If you want to call in, we can have a conversation on the screen. Thank you very much, Crack Tina. We're all showing up for the naturalization ceremony. That would be great. I love it. Congratulations on all-time high. Thank you, Frederick. Senza not keen on Nvidia, trending up. You mean Senze? No, I have much more in a 401k. James, double it. No, that's right. We'll talk about that in a second. Tech wins every time you don't want it. Hi, Martin. Could you give some of your thought on Nikola? I've got to focus on my members, I'm afraid. Members are giving me lots of questions. I've got to focus on them. If you want to become a member of the channel, just for a couple of bucks, I can focus on you, answer all your questions, give you all the perks, the benefits. There's the membership link if you want to become a member. You can have your own earnings, your own reviews. You can send information in. You can call into the show. There's members-only live streams, members-only videos. Many, many perks. I have to focus on the members right now. There's lots of comments and questions coming in. All right, Alibaba still rising. Let me go back and have a quick look here. Plug partnered with Nikola. Kevin B, you can't access Discord either, can you? Not a member. I need one of my members, please, to send me information about the Plug partnering with Nikola. I will make a video on it. I will report on it. Both of those stocks we trend on YouTube for. So if you are a member of the channel and you can access Discord, please do send a link. Links for YouTube to Plug partnering with Nikola. All right? That'd be great. Let me just check in on here.
the things that were leadership, like real estate and utilities, down a little bit. So here's this, broad rally, 2-to-1 to advancing to declining stocks on days when the old leadership, utilities, real estate, even healthcare, not doing well. Tech kind of comes forward. This is why you have such a great market. It just keeps rotating around. And when you look around for the month, mega cap tech, which is a laggard group, not doing so bad after Amazon's up 8%, Meta's up 8%.
Kevin B, I'm sorry, I can't just go and look on the Plug website. If you want me to cover a news story, then please do. I don't work for you, Kevin, as much as I would like to do whatever you want me to do. I have to, you're not a member of the channel. I can't just spend the next 5 minutes looking on Google. I'll come into your office and tell you to Google something for me, shall I? You understand what I'm saying, Kevin? I have to focus on the members and the questions that are coming in and the comments are coming in. I can't just stop the show and start Googling, whatever. I hope you understand. I'm sure you do. PDT is finally going up quite a lot too. PDD. Let me have a quick look for you. David Hensley, how are you this morning? PDD Holdings. Let's have a little look at it. It's up today, 6.21. Yes, we are rallying right now. You're good was just letting others know. Oh, I see. Oh, thank you, good Kevin B. All right, okay. Thank you ever so much. I thought you were talking to me. Go and Google it. Well, you could Google it and send it in. Anyway. Hi, Stephen Lewandowski. Good morning to you. Stephen, your 2-year badge is about to turn 3 years. Congratulations. Morning all. Real. Martin, if I am holding 3 credit cards of 3,000 and of 8,000 of Avgo and plenty of NVIDIA, wouldn't I be stupid not to sell enough from both to disperse the debt? You shouldn't be investing. You shouldn't be investing if you've got debt. If you've got credit cards, you're not going to earn what you pay in interest payments on a credit card. If you've got a credit card and you're paying 23%, you should be paying off your credit card first. That's a no-brainer. That's an absolute no-brainer. That's a very, very easy situation. If you've got credit card debt and you're paying minimum payments, $23 a month, 23%, you should be paying that off before. Not only because it's a higher rate than you're probably going to get on the stock market, but your frame of mind will feel completely different, and the way you invest and the way you trade will be completely different when you don't have debt. You will think of the stock market differently, you'll behave differently, and you'll do much, much better for it. So, pay off the credit cards. Number one, pay off the credit cards. Absolutely. Do not invest anything until you've got no credit card debt. Absolutely. 100% about that. Plug, haven't partnered with Nicola at all. No, I hadn't heard that, but as I say, if you see it, send it in. Most likely a roller truck down a hill together with no engine. Martin, I'm good, brother. I'm at work listening to you as always. Got my 6 months bag. Oh, David Hensley, 6 months. I see that. Hey, congratulations. Thank you very much indeed. Your next one now is when it turns to the 1 year, and it goes bigger when you see it on the 1 year. Congratulations to you, mate. Appreciate that a lot. Thank you for your support for the channel. I hope I'm providing you with a good service. Hello all, Ernestus. Good morning to you, Ernestus. Now then, just to let you know, to update you what's happening, we have got just a few days left to go for the live shows. I'm taking a break from live streaming. I'm having the whole of the month of October off. This Friday is our last show for a month. I'm taking a month off. I will be I will be recording, and I am already recording all of your reviews. They will be coming out next week. Everybody on my holiday, on my vacation, as you say in the US, will be getting all your reviews. These are the reviews I'm doing. Now then, if you want to add your review to this list, you can add your review to this list. You have to be a member, and you have to give me a super chat, a holiday bonus super chat, and I will do it. It's all being recorded this week and next week. There's no live streaming next week. I'm taking the time off. I'm taking the whole of October off to refurbish the studio, to update things, to add new services, to take some time, to take some well-earned rest. I think I've not had a break for 2 years. And these are the reviews I'll be doing, right? But you can add yours to the list. If you want to add them to the list, you can. It's a $10 minimum super chat. Because I don't want everyone giving me $1 super chats to do 50 reviews. It's my vacation, but I will do them. I'm recording them now to come out next week, and so get ready. So I'm doing HPE. I'm doing DDOG. I'm doing Alaska Energy Metals, FULC, Lithium Americas, Fryer Battery. I'm doing Good Natured Products, GDNP. Echo Petrol, EC, GWAV, AMTX, Medical Properties, HOFV, Coke, that's COKE, Cars, CARS, CrowdStrike, and ARS Pharmaceuticals. I'm in the process of recording all of those, and they're all coming out this week and next week. In the first week of my vacation. If you want to order one, I can probably take a few more. I'll tell you when. Maybe 5, maybe no more than that. And it's first come, first serve. Let's have a look. I said check the website. It's on Plug's investor page, but okay, Robbie. Okay. I have 300,000 NVIDIA. The credit card debt is walking money. Matt Dillon. Okay. Well, I don't think any credit card debt is walking money. I'm not sure I know what you mean by that. I don't believe in paying 23% on a credit card while investing on the stock market. The emotions are all wrong. Everything's all wrong. I'm not a fan of that. I'm not a fan of that. As I said before, it's a 4-stage plan. As I explained yesterday, in my my psychology of investing, part 2, I did cash is king. It's not though. I said number 1, efficiency of life. Efficiency means clearing off debts. Don't spend saving, not wasting any money. Plug up all the holes. That's number 1. Number 2, an income. No matter if it's $1 a day or $1 million a day, doesn't matter. Income is number 2. Get income. Number 3, start to invest and then let it grow. Let it build in a 10%. Let it build in a 20% profit. And then you can use margin to amplify once you've done all those things. But that's my 4 stages of investing, and I'm on the final stage now. But there's no shortcut to that. There's no missing steps out. There's no, well, I'll make money and I'll just have credit card debt as well. No, that just shows impatience, shows I want to start doing it. There's always opportunity to invest. Now, a year from now, 10 years from now, it doesn't matter. It's not about that. It's about building the foundations, starting at the beginning. Don't jump to, halfway down. Start at number 1. And build the foundations. Everyone's in a rush. Everyone's trying to get somewhere too quick. The investment won't gain. Would the CC companies? The investment won't gain. Would the CC companies? The investment won't gain. Would the credit card companies will? I'm not even sure what you mean, Matt. You going back to Scotland? Scotland, Martin? No. I don't even live in Scotland. I live in Cornwall, England. But no, I'm here in the studio, and I'm just taking some time off from live streaming and having a break. That's essentially what I'm doing. Anyway. No, I'm staying here, Mitch. PLTR plunging, Palantir. Well, Palantir, as I've warned, is a good company, but it's way, 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 way too expensive. And I disagree Magnus, you saying it's plunging. It's not plunging at all. 2% on this stock is nothing. It's extremely volatile. All you've got to do is stand back and go, it's up 20% over the month. So to say that Palantir is plunging at 2%, it isn't. It isn't at all. It's extremely volatile. It's extremely expensive. So no, it's not plunging at all. I did balance transfers on my credit cards and bought VU 15,000. I did balance transfers on my credit cards and bought VU 15,000. Flipping heck, mate. So you took money from your credit card to buy the S&P. I mean, I know you're going to tell me, right? You've got interest-free payments. Still wouldn't do it. I still wouldn't do it. You're missing out the steps. You're trying to amplify the gains. You're trying to push it. You're trying to push it faster. You're trying to accelerate the natural course of things. I wouldn't have done that. I wouldn't borrow money on a credit card, even at 0%. That's different. Now, you might go, well, you're doing it on margin. You're paying 5%. Yes, I'm paying 5%. It's going to keep decreasing, and I don't have to make minimum payments. You have to find those minimum payments. And at the end of it, you have to pay it off. My margin can run forever. My margin probably will run forever. I'll just keep buying macro dips, and, that's it. Well, you have to pay that off in a year, 18 months, 3 years, whatever it is. And if you don't, they will charge you the interest rate for the whole lot from the beginning at the higher rate. So that's not a strategy for me. Under the HYLA brand, Nikola intends to develop more than 300 metric tons per day of hydrogen, which is expected to be supported by the company's planned hydrogen hub in Buckeye and its partners. Kevin B. That's all I could fit on. Thank you, Kevin B. I need some verification from the official site to be able to report the news. I was joking about Scotland. Okay. I get it. I get it. I use the cards to pay property taxes and little things, just thinking, should I sell low gaining stocks to pay? Absolutely. Pay off the credit cards. Absolutely. Have a credit card. Use a credit card. I use credit cards for cash, as you know I do, but never have a balance on them. Absolutely not. 20,000 off the mortgage or 20,000 Nvidia. What do you reckon for the next 2 years? 20,000 off the mortgage or 20,000 in Nvidia. What do you reckon for the next 2 years? Pay off the mortgage. Absolutely. Pay off the mortgage. I know the growth is better for Nvidia, but you've got to do the steps. Pay off the mortgage first. Absolutely right. If you've got 20 grand and you can pay off your mortgage, pay off your mortgage. Absolutely right. I did exactly the same thing. I'm about to pay it off. Good for you, Ernesters. Congratulations. Are we going to turn red today? I'm expecting a bit of a rally today. How about a home equity loan of a few 100,000 at 5% and buy Nvidia? No! No, definitely not. Matt Dillon, you're a member of the channel. Do you want to call in? Do you want to be on the show? Let's discuss it in more detail. Let's break down your finances. Call into the show. All right? You're a member. You can call in. All right? Okay. We need to get busy here. We've got 107 watching with 71 likes. This is no good. All right? This is no good. Let me do this. Where's my little sound effects gone? Here we go. We can't be going red. That doesn't make any sense. Right, here we go. 107 watching. 107 watching. 71 likes. Actually, that's pretty good, isn't it? That's pretty good by the averages. 78. To be honest with you, we are pretty good. I'll give you that. What's going on here? I'm going to have to switch. This CNBC idea isn't really working out anymore. It's way too unreliable. How many are we up to? 114 watching. Let's refresh the screen. 78, 5, 4, 3, 2, 1. 83. That's more than I deserve. That's fantastic. I'm happy with that. Thanks, guys. Appreciate you a lot. Thank you very much. Appreciate that a lot. All right. Okay. Thank you. So how about an equity loan and a few 100,000 at 5% and buy Nvidia to hold? No. Never, ever bet the castle. Never bet the castle. Yes, I have to pay the credit cards off, but I have all the money. Invested, so I can simply pay whatever is left with the money I borrowed to pay them off. But my Robinhood will pay them. Me understand, Rick McGrath. Yes, I have to pay our credit cards off, but I have all the money invested, so I can simply pay whatever is left with the money I borrowed to pay them off. But my Robinhood will pay them. Rick McGrath, I'm not 100% certain. You're telling me that you have enough money to pay your credit cards off, but you're holding the investments. Pay your credit cards off. But thing is, Rick, and you should call into the show, because it depends on your tax situation. It depends how long you've owned the... I mean, if you've basically made no profit on the stocks and you're not going to pay tax, then sell them for a wash. Just sell them for nothing. No gains, no losses. Pay the money off the credit card. You'll have more money, because then you'll stop paying 20% a month. You'll have more money to reinvest. There'll always be a dip. There'll always be an opportunity. There always has been, always will be. Don't borrow money to be invested. Call into the show to have a conversation. You're paying yourself by lying the mortgage. You're paying yourself by lying the mortgage. A. Rodriguez, I'm not sure what you mean. Bad choice of words with plunging, but meant that yesterday. Gains all gone in a blip. What do you see Palantir bleeding a fair price at? Coming back to your statement being priced too high. Palantir is too expensive. It's I can share with you, Magnus. I have to focus on the members. I can't do a full review for you. If you want to become a member, I can show you the valuation of Palantir. Consider becoming a member. Let's have a look. Martin, dude. Martin, I asked you, give you a teachable moment. I can't call this morning, Martin. I'm at doctor's office waiting room. Okay. Try another time, Matt. Try another time. Would love to have you on the show. Good answers too. I hoped you would say such. Well, yeah, I'm not always going to say what everybody wants me to hear. I'm not always going to say, I'm going to tell you how it is. All right. Using my strategy, my experience, how I'm making money. That's it. I'm not going to change to suit anyone. Anyway, paying the mortgage is paying yourself. Absolutely. Paying the mortgage is paying yourself. You're absolutely right there, Rodriguez. You're spot on. By paying down the mortgage, you're giving yourself a pay rise. I couldn't agree more. Let's go and see what's bringing the markets down. We're flat, but let's have a look. The S&P is flat. S&P Global's going down. Virgin Galactic is up. Nice. Let's have a little look. Still trending down, though. Nothing. I mean, have we reached a bottom? Have we reached a bottom? Is that a bottom of Virgin Galactic? Hard to tell. Hard to tell. Palantir taking a bit of a discount. It'll come back up again, though. It's a meme-style stock. I don't mean it's a meme stock. It's not. Jim Cramer's wrong. But it trades like a meme stock. Anyway, gold, Amazon, Apple. Apple's up today. Next year, energy, Enphase Energy, Coca-Cola. Let me look what date, the very important date this. I've just realized something for you all. I wonder if anyone's thought about this. The ex-dividend date for the S&P 500, VU. The ex-dividend date is... Oh, okay, today's the last day. Today's the last day. Okay, so this is important. This is an important announcement. Yeah, okay. Important announcement coming up. Here we go. NASDAQ 100 versus S&P for the next 25 years. What do you think is the best? Think is best for a 25-year hold? The S&P 500, definitely, absolutely, definitely. Yes, my credit card. Again, not trying to pick the differences, right? It's the overall mindset. If you're trying to always focus which one is going to pay you the most on the day-to-day basis and how it will end up in 25 years, you're going to be unsettled. You're going to be going left and right and left and right. If you just calm down and stay into the same thing consistently, it doesn't really matter. But I would choose the S&P. But when you start trying to compare which one over 25 years, no one can give you that answer. No one. We can compare it over the last 25 years, but going forward, I would certainly buy the S&P because I don't want to be tech weighted. I want to be balanced. Anyway, yes, my credit card balances are invested in the S&P for a year. I'm making money on my Robinhood and paying my credit cards with my Robinhood. My income pays my bills. Okay, so my credit card balances are invested in the S&P for a year. I'm making money on my Robinhood and I'm paying my credit cards with my Robinhood. I'm not fully sure I understand what you mean. You're paying your credit cards with Robinhood. So what do you mean? You're taking the money, you're selling the stock to pay your credit cards? We need more color. We need more detail. Rick, when you get time, call in. You need to be more. I need to understand clearly what you're saying. That's why you get dividend investments over growth, because dividends can grow quicker than growth. They can, but yeah, they can, but we can't predict what one's going to do over the other one. It depends what you're in. I mean, still would prefer growth until I wanted to take my dividends. But me and Fight Channel have a different strategy here completely. He's all out about the dividends. You've also got to remember, if you're getting paid regularly with dividends, it is a taxable event. Now, if it's all on your IRA, it's free. I get it. However, if you've got a brokerage account and you're getting paid dividends all the time, that is a taxable event. It's like selling stocks in a way, because that's essentially what they're doing. They're selling part of the business to pay, they're selling the profit to give to you. So you're paying tax on it. Whereas if the stock grows and you don't sell, nothing happens. No tax. If you get dividends and it's in your brokerage account, you're going to get a taxable event. At the end of the year, you will pay tax. Now, if it's on your IRA, no, you don't. I get it. I have a Fidelity Rewards credit card and earn 2% on every charge. I carry a zero balance every month and earn on average $20 a month, which is credited into my brokerage account. That is free money. You're absolutely right. I mean, that's what I do. I get 3% cash back on everything with my credit card, and I get 5% cash back on Amazon. That's what I do. Dividends are getting paid here shortly on Coca-Cola and Avgo. James, Martin, CHPT got a $19 billion contract with California Highway Charge Point. James, thank you very much indeed. Become a member. You can send me the verified news. I'll make a video on it. Doesn't Fight Channel have those NVDY shares that have have like 50% dividend yield. Sounds kind of risky to me. Yes, he does. Yes, if you have high paying dividends, you have growth that declines. You can't have massive growth and massive dividends. It's impossible, right? That will run out of money eventually. It doesn't work that way. But again, anyway, I've got to focus on this because this is important. We did China earlier. Now we're doing dividends. All right. Fight Channel. I know it's not Friday, but if you want to call in, mate, you are welcome. You're always a great guest on the show. 124. Yeah, if you want to call in, you are welcome, mate. Right, let's have a look at this. Okay, 124. Can you actually get that high? Oh, you can get you can get anything. Doesn't mean it's going to be paid out every month, though. Doesn't mean it's going to be paid out every quarter. Doesn't mean it's always going to be that. And it doesn't mean the stock's going to keep the stock's probably going to plummet. Anyway. See, we discuss important financial matters and not what non-member feels about GDP. See, we discuss important financial matters and not what non-member feels about the GDP. Matt Dillon, that's funny. Right, okay, here we go. I'm going to cover this. Breaking news here on Martyn Lucas Investor. The day has come. The day has come for me about to pick up my highest ever dividend payments on the S&P, and it's the last chance for you to be able to get your dividends for the S&P. We're talking about VU right now. This is my portfolio. We just hit another all-time highs this morning. We're just touching 120 grand. We're just off that now. Remember, my swings get bigger and bigger as my portfolio gets bigger. My swings get bigger. So just remember that. It does happen. But we're looking at dividends now. And let me share with you, this is my 100% of my portfolio. As you can see, is the S&P 500 through the ETF of VOO, VOO, which is the preferred way to buy the S&P. It's better than SPY because it has a lower cost management. And I don't mean the price of the stock. The stock price is irrelevant, has nothing to do with it. But today is your last day. Time is up. What am I talking about? Ex-dividend date is up. Your last chance to get your dividends this time around. What am I talking about? Well, I will reveal all once you tap the like button and you click subscribe and ring the bell. And I'll tell you what I'll do. We've not done this for a while either. I will I will reveal it once you've said hello to the little fellas. Here are the little fellas. We've not seen the little fellas for a while, have we? No, there you go. Tap the like button. Just for that, I think you should tap the like button. All right? Let me reveal the ex-dividend date is the next one is the 27th of September, which is in 3 days from now, which is we are the 24th of September. So what do you mean? I thought it's all over today. It is, because your stocks that you buy have to be settled by the 27th of September. That means you need to buy today at the absolute latest. You need to buy today at the absolute latest. So if you want to buy the S&P 500, I would suggest VOO is the way to go. That's what I believe anyway. It's better than SPY. Could be another reason why the S&P is down today, actually. But anyway, no, it's not. That would have nothing to do with it. Anyway, 27th of September is the ex-dividend date. So you need to be in today because it takes a few days to settle. Normally 3 to 4 days. So we're 3 days now. So you're pretty much there. We may be too late, maybe last night. I would already be in, and I am in. There's no big drop for me, so I'm not buying anymore. Then on the 1st of October, you'll be paid. Pay date, 1st of October, as you can see here. Pay date, the 1st of October. How much are we going to get? Well, as you can see, traditionally it moves up. It's not always going up though. 154, 64, 47, 54, 54, 73, 52, 67. So we don't know. Don't know is the honest answer at the moment. That was the projected, and then that's the actual price that we actually got. So you can see we're outperforming what we know. Not always, 149, 154, not always, but you can see it's generally trending up with a little bit of a ripple along the way. This one, I don't know. I've got no idea. We shall see what it is. But anyway, ex-dividend day is up today, really. Well, 3 days from now, but you need to be in today. So are you going to buy the S&P? I am expecting somewhere in the region of about $600. I can't be precise. There's no way to know, but I'm expecting about $600. Now, what will I do with my dividends? When you get your dividends, make sure that you've turned reinvestment off. Very, very important. Let me explain what happens. If you've got dividends and they pay out on the 1st of October, but it'll take another day for it to settle and all the rest of it, but the money will come in. You've got two options. If you've got there's two accounts you can have. There's the brokerage account, and then there's your IRA, ISA, your tax-free account. You've got two accounts. We've all got two accounts. At least you should have, right? If you get dividends into your IRA, and I'll share with you my IRA. This is my IRA there. I will get money into here. It'll go into the buying power. If you've got auto reinvest your dividends, it'll automatically purchase VU in my case. Again, it'll just buy it. Wherever it is, whatever price it is, it will buy it. That's the lazy way. That's the man sat on the beach paying no attention to their stocks. Don't do that. I don't do that. So in a week from now, there'll be some money in the buying power added to the 1 cent. All right? I will then have it in there. It will sit there in cash. It'll be a tax-free event. In my IRA or my ISA in the UK, it'll be free money. It's not free money. It's essentially the profits that I would have got on growth if they'd not given it me on dividends. It's the same thing. It's your money. You either get it in growth or you get it in dividends or a bit of both, right? In this case, you get a bit of dividends. So it'll come on in. It'll give me some money, and it won't be... I've turned off auto reinvest. I will wait for a macro dip. I won't wait too long. I'll just get a little bit of a dip. I don't see any major crisis down the line, and I'll just be in and be done with it. That's my IRA. Tax-free, didn't cost me anything, right? So it doesn't matter what I do, really. If I go over to my main brokerage account, right, at the moment, all my cash is gone. I'm fully invested. I'm paying margin. So what I want to do is, again, auto reinvest. The dividend is turned off. I don't want it to go into buying VU at the all-time high as where we are now. I want to be reducing my margin, so I'm ready to use more margin when we get pullbacks, when we get macro dips. I'm already invested. Back in January, we're having a rally. We've had a huge rally. I don't want to be buying all-time highs. Nothing wrong with all-time highs when I've got cash. Nothing wrong with all-time highs because we always set new all-time highs in the future. But if I'm using margin, which costs me money, I want to get a discount, obviously, right? To compensate the interest. And not only that, it just is good practice to keep getting the dips rather than just keep buying on the way up. On the way up is fine with cash. If you're using margin, you buy on the way down. Obviously, it makes sense, right? So auto dividend is turned off. Now remember, this is a taxable event. It's a taxable event because you've received the profit. If your stocks go up, in value and you don't sell, you don't pay any tax because you've not sold it. However, this is why dividends is not all a bonus. It is if it's all on your IRA or your Roth, but it's in your main account. It's a taxable event. If you earn dividends, it's an income. Just like the money I earn on YouTube, it's an income. I'm going to pay tax on it at the end of the year. My brokerage is going to tell the IRS or the Inland Revenue in the UK and say, Martyn's earned all this money on dividends. And they'll go, great, 20% of that is ours. That's right, it is. So, what I don't want to do is just reinvest that at the all-time highs. What I want to do is take that money that I'm going to pay 20% on, because I am, regardless, and reduce my margin by currently 5.05%. That's how much I'm paying on margin, and I'm going to reduce my margin by the dividend amount, which for me will be about 600 in total over the two accounts. So like 400 here and or maybe 500 here and like 100 on the IRA. That's the sort of somewhere in that region anyway. So I will reduce my margin because that's taxable money. It cost me 20% to receive it, and I'm using it to reduce margin, to reduce expenses. So I'm saving, all right? I'm saving money with that. If I just buy the all-time high and it was reinvested, I'm buying at an all-time high when I don't need to do that. I can buy lower, but also I'm not reducing the margin, am I? I want to reduce the margin with the dividends. That way it compensates what I'm paying in taxes to receive that money. Does that make sense? Okay, that's my strategy. That's the dividend payments about to come up. So if you want to get VU, not the S&P generally, because SPY might have a different date. I don't know what SPY's date is. I haven't looked. It's a whole different setup, a different time structure. But if you want VU, which is the recommended way for retail investors to buy the S&P, today, maybe even already today, if you are not sure and you're thinking, well, I want to buy, but I want to make sure I get dividends, remember, dividends isn't free money. If you get paid, the stock will just compensate it. All right, it's the same thing. So don't chase the stock to get today's dividend. All right, if you want to be in and you like the price today and you got a little bit of a drop today, all right, buy the S&P, but don't chase it because you want to get dividends because you think, oh, I got free money and I can sell it tomorrow. No, because you'd pay tax on the dividends, then you'll pay tax on the profit. It's not much point doing that if you're just going to try and buy and sell for a dividend. There really isn't any point, at least on the brokerage account anyway. So if you're not sure and it's critical to you to know that you're going to get the dividends, because if it's not settled, you'll just be in for next quarter. Next quarter, you'll get dividends, but you won't this quarter. Then you need to contact your brokerage, see if I buy today, what's the settlement period? They might say 2 days, 1 day. I don't know. For me, I think it's 3 or 4 days. So today may be already too late. Anyway, so there you go. Click above my head for further information down below in the description. Over here, I've got some more videos, and down here, my new psychology of investing. This is cash king? Absolutely not. And if you watch it all the way through, you will realize I prove to you cash is not king. All right, until next time, as always, take care of yourselves and each other. All right. Let's come back to here. 119 again. There we go. Hardly made a difference, did it, today? Hardly made a difference. Let's have a look. Microsoft coming down hard. Let's have a look. Microsoft 1.24. But remember, this stock is very, very expensive. Oh, Fight Channel's just called in. Ah, fantastic. We got Fight on the channel today. Lovely stuff. Guest one. Let me line him up. So we've got our star guest calling in today. Lovely to have him here. Let's bring him in. Fight Channel, you're live on the show. How are you, mate?
I'm good. Matt Dillon has some very good questions here on the show today.
Yes, I know. Isn't it great? We got away from the trolling this morning and just some good thought, good conversation, challenging. I like it. It's what it's all about. So I'm glad you've managed to call in for a couple of reasons. I've been looking on your Barbie channel and I've seen all these videos that are upcoming about to post. I am excited about it. For those of you who don't know, if you click on Fight Channel's name in the chat, if you just drop in a hello Fight, if you get a second into the chat, click on it. You can go and access Fight's channel. He's a YouTuber and he creates Barbie videos. Don't ask me why. Don't ask me why it even started. You probably don't want to hear the answer. I've no idea. It's probably best to leave it as an imagination.
Well, with just a joke. It should have been a one-off show, than that people asked for it, like Mike and Craig wanted me to keep going. Mike commented on most of my them anyways. He already commented on one. They don't come out the Friday.
Hey?
Mike already commented on one of my shows. They don't come out the Friday at 8 a.m.
Right. There you go.
Because you think Barbie and Marcus Lucas show is going in.
Why do you always say Marcus Lucas? I've always wanted to know why.
What, Martyn Lucas?
You say Marcus Lucas on your videos. When you're doing the voice of Barbie, it's always Marcus Lucas, but when it's here, you say Martin. It's as if when you do Barbie, you slip into a different name. You become a different person.
You asked Barbie on that one.
That's it. I should ask. Well, I'll do that then. I'll reply and do a comment. All right, brilliant. So go and click on his channel, everybody, and you can see when I'm away, there's going to be Barbie videos every day. So there you go. He's making the most of it. Good luck to him as well. I wish you all the best.
I made about 20 this weekend.
Brilliant. I love it. So talking about dividends then, because, VU is pretty much up now. It's last night or today. You already need to be in with VU. 1st of October. I'm very, very excited. As I just explained in the video, I just going to put out. Yeah, I'm really happy. It could be somewhere above $600. My aim is $1,000 a month. Sorry?
That's for the quarter, right?
The quarter. Yeah. The quarter. Okay. Yeah. I want to get 1,000 a month. That's what I want to do, and that's where getting towards the million will give me that. And I just wanted to say to people, because we were making the video, and you can tell me, because you've been doing dividends for a while now, and you can explain because you've experienced it firsthand. I've only had a year of dividends, and it's not been a taxable. I've not seen it on my tax yet. If it's in your IRA, it's tax-free money, right? Any dividends you get in your IRA, ISA is free. If it comes into your brokerage account, it's an income, isn't it? It's actual income, and they report to the IRS and they say, "Hey, you've earned this money this year. You're going to pay tax on it, and it'll be reported to you whether you like to report it or not. It'll be there on your system, and you can't really get out of it." So, how have you experienced that? Because you've been doing this for a while now, and I want to ask you, maybe you've seen it, maybe you've not, maybe you don't pay attention to that, I don't know. But you love dividends, you prefer it. Your whole portfolio is about dividends. You're the dividend king, no question about it. And you're making a lot of money on it, and it's working for you, and your portfolio is great. But have you seen end of the year that you've got all these dividends and you owe all this money? Or explain to me how it all works for you.
Well, last year I had a job. I was not making as much dividends I was as of this year.
Right. So this is the main year for it, right?
Yeah, this is the main year. And also I haven't been, now it's up to $1,000. I think this is September. I might be up to about 7,000 worth of dividends.
This year?
Yeah, in my brokerage account.
In your broker, right? So you're going to pay tax on that, aren't you? Unless you are below the tax threshold, you might not earn enough. I don't know.
Well, I will earn enough, but I also am self-employed. I got a lot more tax advantage than most people have.
Correct. That's like me.
Yeah.
I'm self-employed. Martyn Lucas LLC employs Martyn Lucas me. So I employ myself, if you like. So anyway, that's a whole different ball game. So you've not yet experienced firsthand, but you are aware of that, right? That seven grand you've earned so far at the end of the year is an income for you. But like a self-employed person, you can declare you've got all these expenses that you can put through to reduce your costs. I mean, as I always do. I've not paid any tax. In fact, I got a tax refund this year because I posted losses from last year. Because everything I do is a taxable expense. This studio, everything, all this equipment, everything I do, nearly everything I spend money on, even right down to the shirt I put on my back. This is a shirt I need for this show, and this is my expense. This goes against my tax. For those of you who are not fully understanding that doesn't mean it's free. People always say you have a tax write-off as it's free. Even my own wife says that to me. She says, "Oh, you can write it off against tax." I say, "Babe, it doesn't mean it's free." If I buy something today for my business, which is a taxable event, I can write it off. Write it off means you put it in the ledger and say, "I bought a shirt today. It cost me $20." At the end of the year, let's say my tax bill is $10,000. If I had no expenses for all the money I've earned and I spent nothing, it was all profit, 100% profit, they would say you owe 10 grand, right? They then look at all my expenses. So what my profit is. Now let's say I spent 2,000, my actual profit now is 8,000. I pay tax on 8,000. That's how I reduce it. But I still pay tax on 8,000. That was just an expense against my income. It lowered my profit. It's not free money. I still pay 20% on the profit that I've made. So very, very important. That's not, you don't get it for free. Okay, it just reduces the portion of tax that you might pay. So at the end of the year, you've earned 7 grand. They're going to come to you. Now you've obviously got income coming from somewhere else. You're self-employed. You told me you do other work and so on. So you've got cash coming in the bank account. That's where you'll probably pay your tax bill from. You'll send out a check or whatever, and it will cover that. So you calculate.
Just charge on the credit card.
Stick it on a credit card. Yeah, we've been talking about that all morning.
well, if you do the credit card right, like I do, because I used to use a debit card and come out of my account. But I use a credit card now. If you make a weekly payment on it, like I do, between $400 to $600 a week, it does depend how high it is. Then, I mean, I get 1.5 back right now until I get my Robinhood credit card, but I still get 1.5 back. The rewards, all I do with my rewards is put it towards my credit card payment. I haven't paid interest on my credit card since I had that credit card.
Right. Well, what did you mean a payment? What did you mean a payment plan though? Explain. You just said you're going to say that again. You're going to pay your tax bill on a credit card. Mm-hmm. That's fine, but you're going to pay it off end of the month, right?
Always pay my credit card on a weekly basis.
You pay it on a weekly basis, but it's always zeroed.
No, always running up. I'm at $1,200, $1,200 worth of credit.
So you are paying interest on your money then?
No, because when you charge them, does it take 30 days before they start charging interest, right?
Yeah.
Most of that stuff's already been paid off within that 30 days.
Are you clearing your balance once a month, though? Is there always a balance on there?
There's always a balance on there.
Well, you're paying interest then?
No. I've never paid interest on this card.
You've never paid interest on the card, even though the balance isn't cleared?
Because I'm paying more than what I charge on it per week.
Okay. You put money on the credit card, you go out and buy something, and then you pay it every week.
Mm-hmm.
By that amount or more than that amount?
Well, right now I'm at $1,200. I'm going to put at least $500 on it because I got to pay my daughter $350.
Okay.
But yeah, it's all you getting paid more than what I charge on that card per week. I have paid it off one time since I had this credit card.
So you're rolling the balance, continually rolling the balance, and dripping the money in all the time.
Right.
And you're saying to me that the credits that you put onto it aren't being charged because they're new ones. Essentially, you're paying off the old, right. I'm not fully convinced that's how that credit card works, but if you've never paid interest because you get your bill every month.
Capital One, because it takes 30 days before they
post it. Yeah.
Post
I get that, the settlement date and everything else. Yeah. But you're saying you've never seen an interest payment on your account?
Nope.
Okay.
The only interest payment I have to pay is on my margin on Robinhood.
Yeah, absolutely. Okay.
But that's going down too, because I'm paying that off too. Every week I put $150 in my brokerage account. That pays it off.
Yeah. Well, that's the difference, isn't it? With borrowing money on margin, it's not like borrowing money from the bank or the mortgage or a credit card, because there's no minimum payment. You could have margin run forever. You can pay it off whenever you want. You can add money whenever you want. You can increase it whenever you want. It's a completely rolling, flexible thing. So for investing, it's perfect. This is why I said earlier, when someone was saying, I'm borrowing money on my credit card, or I'm borrowing money on a house to buy stocks, I wouldn't do that. I think that's a bad idea. Yeah, you're going to say something.
If you buy the right dividend investment, you can do that. I've seen people do strategy like this with Yield Max, where they took a HELOC of $150K, bought AMZ is a cover call for Amazon, and he makes $24K off of dividends a month.
He borrowed money. Where from?
A HELOC.
What's HELOC? I've never heard of that.
HELOC is you take a loan out off your house. That's what it is. He borrowed $150K off his house. Then you put it in Robinhood, bought AMZ. There's a cover call for Amazon, and he made $24K, and he basically had paid off his HELOC in 10 months.
So he used the money to then pay off the loan with against the house.
Right.
Okay.
I wouldn't do it with growth stocks. No.
Yeah, I've got to say, because we try to offer good support and help people. There are lots of risky strategies out there which can return huge gains and so on. But I have to say, for me, for this show, for my viewers, I have to say, borrowing money against the house to invest, for me, is an absolute no-no. No. I would never do it.
I wouldn't do it on a credit card.
No, I wouldn't do it on a credit card either.
I'll build up my brokerage account. Then when you build your brokerage account, you got to understand how margin works. You got to look at your maintenance fees too. If it's between 30 and 50, then that when your margin will start to grow more than at 50 and above on your maintenance. But you keep it between 30 and 50, your margin will grow a lot quicker. I had noticed that on my account.
Well, it does, because when you borrow using the brokerage's money, when you're spending margin, when you're using the brokerage's money to buy stocks, as you go over the 50% and you spend more, you see greater gains and greater losses. We have to be clear about that, because more of your overall balance is on margin. And the reason why the percentage looks greater on the up and greater on the down is because the balance that you've had from the brokerage is not added to your balance. It's not like borrowing money from the bank, is it? Getting $10,000 from the bank and just putting $10,000 in your account, and now you can see you've got $10,000. When you borrow margin money from the brokerage, you buy stock, you own that stock, and that's visible, but it doesn't show in the balance. It doesn't show on your overall, my balance on the screen right now, if I was showing my screen now, shows what I have got if I sell it. That's what I've got today in real money. I can walk away with that money. The money I borrowed on margin isn't added to that. So because of that, obviously my percentages move greater because my balance is smaller. That's obvious. As I end up paying more and more margin off and it all becomes my money, the percentages get smaller and smaller, because now it's the same amount of money, but the percent gets smaller. You're going to add something to that.
No, I wasn't talking about that. I was talking about how you build your margin within Robinhood. You know how your margin requirement, you got initial requirement.
How you build your margin.
Yeah. and you want to keep your maintenance requirement between 30 to 50% to grow your margin amount.
Correct. No, you're right. I've noticed as well as you because yesterday I put some money in. I got paid from YouTube, and my margin amount that I could borrow didn't just go up by that amount. It was double
more.
that. Yeah.
Because I think what ain't booze like a 30.
Yeah, 25.
25.
25 is the margin maintenance line, and 30% is the what's the number I'm looking for?
I'll look for it.
Allocation, whatever it is.
Initial investment and maintenance requirements 25%.
That's right. Yeah, it's the lowest level there is. It's the lowest.
Yeah.
It's regarded as lowest risk.
Most of mine are at 35%.
But I noticed this when I noticed how this a couple of years ago when I got onto that margin maintenance line, and technically margin call. I noticed as I was getting closer and closer to the margin, as I bought more, it gave me more room. You'd think it would like make it worse, but it actually percentage-wise gave me more room. It's like, it's just how it works. You just play around with it and you can see it for yourself. But it's interesting though. But I certainly wouldn't be borrowing any money against my house. I mean, I looked at it. I said the same thing. Because for me, right, in England, I have a house worth about $333,000 free, paid off, just sitting there. $333,000. And I considered this for 5 minutes, right? Right? I've got $300,000 doing nothing. The house is going up in value over a period of time, but we discussed houses going up in value. What does that really mean? Unless you're going to sell it, doesn't mean anything. You're going to live there. It's the same thing, right? But I've got 300 grand. Now, technically, I could, and I looked into it, I could remortgage my house. I could get 50,000 out of my house. I could get 100 grand out of my house and still have 200 grand equity. No problem at all. Take that 100 grand at 3% mortgage, stick it in the S&P, make 13%, using my strategy, maybe 20 by buying the macro dips. It's a win-win-win. And you might go, well, why don't you do it then? You're doing that with margin. You're borrowing money to buy margin. The difference is with margin, I don't have to pay it back. I just service it all the time. Just service it as I bring money in. I'm reducing it, but I don't have to. I could reapply. Whereas if I borrow 100 grand on my house in England, there's 100 grand. Brilliant. I'm only paying 3%, 4% mortgage. Now I'm going to make all this money on the S&P. Brilliant, making all this money. However, I've got to pay back the mortgage monthly. So I've got to sell something or take the money out of my YouTube to send to England. Now I've got to transfer the money and the interest rate, the exchange rates. It doesn't work out quite as good. And then on top of that, my house is at risk. Now, is it really a risk? Well, everything's a risk, but I psychologically, emotionally, having my home, my castle on the line, even though it's extremely low risk, it's still on the line. I think it's getting greedy when you're pushing it too much. For me, I wouldn't do that. Someone mentioned earlier they've done that. They borrowed money against their house to buy the S&P. I can see why, and I considered it, but I don't.
Also, you got to look at the dividend yield you're getting too. Like the bill, 1.8%. Yeah, pretty good for old way of dividends, right? You got different tiers of dividends now.
Yeah,
companies are coming out with all kinds of way to do it. Like me and YieldMax, they're over. Majority of their funds I'm in are over 50%. And you said that eventually I could run out of money. Yes, that is true. I could run out of money on that, but right now I'm in it with NVDY. I'm only down $600 on NVDY because NVDY been going up after it went down, and I've been reinvesting. As soon as I get back above my cost average, I'm making more money.
I think this conversation is going to get extra interesting at the end of the year when you get when we finally see the tax implication, obviously, you've got other things to do in your own personal life, other income, other expenses, but it'll be interesting to see. I'm sure you'll be happy to share it with us on Robinhood. It'll tell you, you've earned this. We're reporting to the IRS $2,000 worth of tax events you're going to pay tax on, or whatever it might be. Be interesting to then see and calculate. So for those of you who are interested, me and Fight have two very different strategies. We ultimately want the same goal, but we're doing things slightly different. I am buying the S&P the way I'm doing it. Fight is buying growth stocks, dividend stocks, very high dividend stocks, and we're sort of racing to $1 million, and you can follow our progress. Be interested to see, actually, if you were able to share your balance, where you were a year ago and where it is now. And I don't know, when you call in, you're able, and it should show you on the system that I provided, where you can share your screen. Maybe have a look at that one day and sort of show us your, if you feel comfortable with that.
Oh yeah,
but
you could share on my YouTube channel. I mean, I do weekly updates on my account every Sunday.
Oh, there you go. Go to his YouTube channel. You can see it there. There you go. Even better. Brilliant. That's not on the same time as I've got a show, is it? If you're doing that, I just want to make sure.
Sunday at noon.
That's all right then. Sunday afternoon. I'm just having a cup of tea with Leah. That's fine then. You crack on.
I'm usually out working.
Brilliant.
It's football time is money time right now for me for DoorDash.
Absolutely. No, I get it. Let's see if we've got any questions for Fight. Has anyone got any questions about his dividend strategy? I would love a taxable event on $1 million, and I will one day. Rick McGrath, absolutely right. My accountant, as it is in England, it's called a CPA in the US. My accountant said to me, it's a famous story I repeat to my wife too many times. She's sick of hearing it. My accountant said to me, Martyn, I would love $1 million tax bill. It means I've earned 4. Essentially 25%, if you want to just round it up, it means I've earned $4 million. I won't worry about it. So yeah, it's true. If you get $1 million tax bill, you've made a lot of money. So you're right there, Rick. When you get a second, will you put Fight Channel's link on here, please? Yep, I shall do it right now. Let me scroll up to Fight. Let me grab Fight. Let me do that and go to channel. I shall give it you like this. Because Fight can't share his links, but he can you can click on it. Here we go. I'll do this now. Fight. It's a little promotion for your Fight, mate. There you go. There is Fight Channel's YouTube channel. If you go and check it out, he's got all his Barbie doll videos coming out. And as like he said, he also shares with you. I'll share it on the screen. He also shares his balance as well. Interview guest. Sorry, let me just bring you in there a second. Was you talking then a second, Fight?
Yeah, I think I'm about 644.
What's that? What's 644? Your balance?
My subscribers on my channel.
Hang on then. 648 now. You just gained a few more.
Yay, 4 more. All right. Yeah.
There you go. Shall we have a bit of fun, folks? All right. What should we get? 650? All right. Everyone subscribe to Fight. Everyone subscribe to Fight. I've dropped it in the chat. I'm going to give it
600 videos on this channel, people. Viewing there.
You ready? 5, 4, 3, 2, 1, 648, 651. There you go, Fight. 651.
And anybody put a comment on my thing, I will make a video on it and explain why I'm doing what I'm doing in my account too.
There you go. Spot on. There you go. So do that, folks. If you want to go and leave Fight a comment, he'll happily do that. Let me go back to here. I'm just going to change that, turn that off a second. I'm back to here again, and there we go. All right, 651. Let me see what's up to now. Did it go up another one? 655. Nearly zooming into 1,000. You'll be monetized at 1,000. Anyway, so be interesting to carry on and get more information as we go throughout the year. Hi Fight, Dividend King, Barbie Fun Girl, says Stephen Lewandowski. Hi Fight, says Mike, Fight Channel, can you get a drop link, please? I would like to watch your show. There you go, I've just put it on there. Hi Fight Channel. Confusing. What's confusing? He would be paying interest, well, you can if you want to talk more to him, you can message his channel, and he can comment to you back here. My credit card works the same way, or so is ahead all the time.
Yeah, I'm always paying ahead on my credit card.
Ah, that's what it's doing.
Like if I charge 300 that week, I'm paying 400.
I see what you're doing.
Yeah,
Okay.
like this week, it's gonna be I might break even because I got my daughter. I got to pay her $350, and I just changed my Venmo over to my credit card before I get that 1.5% reward.
Tim Rogers, he is using his credit card as a bank, so he is paying down every week. However, if he does not pay his balance in full, he will pay interest on any outstanding balance charges if he pays off monthly. Exactly. That's what I was saying. But that's what I was thinking. If he's just rolling his balance, he's paying interest. However, he's telling me he's seeing his balance and there's no interest on it. Now we've discovered what he's doing. He's just paying. He's paying monthly, but he's paying weekly ahead, and he's always paying ahead. So he's never actually getting a postable balance. That's what it's called, a postable balance. His balance isn't settling with the period and then charged interest. He's paying ahead of the time. So he's avoiding paying interest. He's doing the same thing as I am, except I just pay it once a month, automatic. I don't even know I'm doing it. It just happens all by itself. As long as the money's in my bank account, it just pays it. I can see what my balance is because there's about 20 days ahead. It says this is the cutoff date. That's what I was telling you the other day about. I time my purchases to give me 56 days, like nearly 2 months of interest free. I will make sure big purchases like booking a holiday or buying a new phone. I'll just go, I'll wait till next week. The cutoff comes, then I buy, and then I've got 2 months. What he's doing is paying off weekly to achieve the same thing. Is that better or worse than my strategy? It's just different. No. It's just different.
It's better than using a credit card and getting the money pulled out of your bank account right then and there. The way I look at it.
I think potentially my strategy would be slightly better, and I'll tell you why, Fi. I'll tell you why. There's not much in it, but by paying the full balance at the last possible moment, which is what I do, I set it on the day, I'm allowing the maximum amount of my money to be put into Robinhood, into my margin. I've got no money. Basically, I've got no money sitting around. There's never more than $10 in my bank account because it doesn't earn any money, right? So I've got the minimum money. Now, what happens is when I get paid on YouTube, I know exactly. I've set it up. This is how I've done this. I get paid on the 21st on YouTube, and my pay date is the 25th on my credit card. And it wasn't that. I moved it because you can move it, right? I moved it. I think you move it like twice a year. I moved it to be just including the weekends, just in case it was a Saturday, Sunday, and I got paid on the 23rd and it was settled. I made it so my wages would come on the 21st. My credit card would pay on the 25th, allowing the 2 days, 23rd weekend. That way, there was never any money sitting in my bank from the previous wages doing nothing. It had already gone Robinhood. It was already reducing my margin. I get paid, and within a blink of the eye, I take out all the money from my wages into Robinhood, leave just enough to the penny to pay the outstanding balance on the 25th, and that's it. No more, no less. I hold a $10 balance. That's it, just to keep it the minimum, right? So I think my way, even though it's tiny, ultimate result is the same. Neither of us are paying interest on our money, but I'm using more of my cash to reduce my margin. You're maybe not getting quite as much because you're not waiting the longest period of time. You're doing it ahead of time every week. If you just waited, you'd have more. You could use more of your money in margin.
Well, also, I got a lot of things coming on my bank account. Know why I do that for? Because I got my car payment, I got life insurance, I got my car insurance. That's why I keep a large amount in my bank account right now. But eventually, all that going to change when my daughter get out of college, truck payment get paid off. When my daughter get married, I mean, I could drop my life insurance because I have enough in my account in Robinhood for I wouldn't have to have life insurance. And people don't understand how life insurance works. See, I got term life insurance. I was taught buy term, invested different. No, I have done. I bought term, invested different. After a while, after you get enough in your investment, you could drop your term because it's like car insurance. Why do you need it? I mean, if I have enough to bury myself, it costs between $15,000 and $20,000 now to bury yourself. I mean, I got that in my brokerage account. I could drop my term insurance. That's $350 a month, and put that in my investment next year and make more money.
I'm listening to you, and as you're listening to you, I wanted just to share this on the screen so I can show people what I mean. How can I show this in the best possible way? 25th. Okay. All right. I've got an app here called Easy Books. I'll share it on the screen. This is my actual private account now. I'm sharing on the screen. This is my Easy Books. So a ledger system. For those who don't understand what a ledger is, I did accounts when I was at school and college, whatever. A ledger is both sides of the transaction, okay? You put what comes in, put what goes out, you report all your transactions, so on. And I do this day to day. Now, you might notice, if you look on the screen there, can you see it says my bank account? This is my real money photo. I'm sharing everything here, look. 1,259. Now, you might go, hang on a minute, I thought you kept $10 in. I do. That's my credit card payment this month, bar $10. And tomorrow, the 25th, that will go down to $10. Now, I'm just listening to what Fight was saying. I've got lots of expenses, so I do it weekly. Everyone's got their own way of doing it. The reason why I can do this, because I have expenses as well. That's not exclusive to Fight. It's not exclusive. We all have expenses and bills and money coming in and out and different responsibilities. But what I do, because I'm mad on numbers and mad on figures, and I live in this studio. This is my crazy world, right? I put every entry. I put every entry as I do it every day, and everything that's auto paid is set up to auto repeat on that ledger every month. That's how I can tell you what I've got to the penny in the bank 10 years ago and 10 years from now, right? You don't do that, right? I do that. When I go to my, right? Yeah, but it's not too much work once you set it up. And what I mean by that is when I go to my CPA or accountant in the UK, they have nothing to do. Nothing. I can give them the trial balance, the balance sheet, the profit and loss, the trial balance, the trial profit instantly. I've got it. I've got it, that report to run 24/7, 7 days a week. I'm always complete. I'm ready to give you my tax returns right this second because I just do it as I go. So because I do it as I go, I can see exactly what my credit card is a month from now. So I can set up my auto pay. That way I can maximize it. Now, not everyone lives like that. Not everyone is going to be that disciplined, and not everyone needs to be that disciplined. At the end of the day, when all push comes to shove, using an old English analogies, me and Fight are going to be within pennies of each other. It's not really going to make a difference whether you write it all down and do it day by day and pay it off monthly to the second, maximize it like I do, or you pay it off weekly like Fight does. What's important is you are paying it off and it's always zero and you don't pay interest. That's the important issue. And that's an important point to stress because when everyone's trying to find the best ultimate way, which stock do I buy? Should I be dividend? Should I be growth? Which credit card? When do I pay off? You're going to achieve your goals and achieve financial freedom and happiness and all the things by just doing the basics of being in, keeping cards zero. How you do it, the detail and the individual choices aren't going to make that much difference at the end of the day. It's not important. People focus too much on all the choices and the options rather than just doing the general thing the right way. It's why I talk about time in, not timing the market. If you're always chasing everything, you're missing opportunities in, missing opportunities out. If you just stayed in and did nothing, you're probably going to beat everybody anyway. So whether you do it monthly, weekly, daily, however you organize your finances, as long as you stick to the basic principles, if you don't pay any interest, whether you pay it off daily, weekly, monthly, automatic, manually, it doesn't matter. As long as you stick to the basic principles, you achieve the same goal at the end of the day. Everyone does it their own way. And there's not a right and wrong way. My way isn't the only way. My way, mathematically, I would argue, if I ran it through my software, I would probably be a few bucks more than Fight, because I would have those few extra days of that margin, which he wouldn't have. And I mean a few extra days. And remember, it's the few extra days on the amount that I'm reducing it by, not the overall. So that 5% on that $1,000 from YouTube is a few pence if I did it weekly as opposed to daily, as opposed to monthly. It's not going to change that much. So I hope that. Do you agree with that, Fight? Basic principle.
I agree. The one question that came across, how someone had like 50K in the video, want to get in pull money out in the video, put 25K in the view. I would not sell my Nvidia if I'm not making a profit. If I'm making a profit, I would take that profit off the top, then move it over to view. But I would never, especially what you got in at. Maybe you got in at $100. Do you think Nvidia gonna go back to $100 anytime soon? I don't think so. Charts might say it do, maybe not. Who knows? We don't know what the future is. But move that profit, you want to get in the view. I mean, yeah, Nvidia does pay a dividend, 1 cent a quarter per share. Whippy, where you get more off of view. The way I'll look at it. That what I would have done if I had that much in view. I mean, in Nvidia, I'd take the profit off the top and move it over to view to get that dividend.
I appreciate that. Why I was hesitant to give an answer, because you have to do what you've done today. Call in, because there's so many parts of it. We don't know what his tax situation is. We don't know anything about his transaction and how he's bought it. But ultimately, the basic principle comes down to this. Don't flip-flop in and out. Give it time to grow. I like to use the analogy, putting a seed in the ground. If you put a seed in the ground, a plant in a plant pot, and you look at it and you stare at it, and in 10 minutes, you can't see anything. So you pull it out of the ground and you put it in another pot and you stare at it, not doing anything, and you pull it out of the pot, and what's going to happen? It's going to die. It's going to go to zero. It's not going to do anything, right? I'm assuming you bought VU. Didn't he say, was it 120, wasn't it? Did he say?
That was Nvidia at 120.
120, right. He bought Nvidia at 120, okay?
Well, he's at a loss right now.
He's at a loss. Yeah, he would be, right? 120.
Just saying.
I'm not advising you should have bought it at 120. I'm not advising you should have bought it at 90. I'm not advising you should have buy it at 210, maybe, in 12 months. But if you bought it at 120, you should have been saying to yourself, and I'm assuming you was, I'm buying it at 120 because I'm buying a great business that's going to be worth at least 130, 140, 150 in the future. Well, the future hasn't happened yet, is it? You've only just bought it.
Yeah.
Because you've bought it 120, you've had it no more than 2 weeks. So you've had that seed in the ground in the plant pot for 5 minutes in the full term of things, right? No time to growth, no new earnings, no report on Blackwell, nothing. And yet you're going, should I sell it and buy something else?
We won't get Blackwell things till end of November.
That's right. So you've got to go at the very least, a couple of months, right? December. And that is no time in the stock market world, no time at all. Yes, we know stocks can move up and down in 5 seconds, but as an investor, that's no time at all, right? So if you bought it at 120 and you're considering, maybe I should dump it now and do this and do this, maybe you should, maybe you shouldn't, maybe it's the wrong thing to buy. I don't know. That's a whole different conversation. But if you bought it at 120, I'm assuming You bought it at 120 because you believe it's going to be worth 130, 140, and 50. And most of us here will agree with you. We all believe that. I believe it's going to be 210 within 12 months. Some are saying 220. There's sky high numbers, right? Someone's going to probably say 1,000. Someone said $1,000 the other day. I mean, we just make up numbers, you know.
I think where analysts said between 200 to 250 by next year.
Yeah, exactly.
I mean, you're right in the ballpark.
So just wait. Now, do we know it's going to go there? No. Could it go down lower? Yes. You know, like Sensei said, the chart, and I don't use the chart to trade. I use them to understand human psychology. I understand charts more than most people think I do, actually. I try to let on, I ain't got a clue. But actually, I know a bit more than I let on, right? But I use it to measure people's sentiment, psychology, and so on and so forth, not to make my financial decisions, because it's only what happened, not what's going to happen. Just the probability is likely because that's what people did last time. It's like saying most people buy Christmas presents at Christmas. They'll probably do it again next year. It's what people do, right? People bought at this price, sold at this price. So it's a good understanding of knowing how it works to measure what people are going to do, but it's not a prediction. No one has a prediction. So if you bought it at 120 and you were happy, do nothing. If there is one exception to this, if you've now found out information, if you've read the balance sheet, if you've done some studying, you've listened to what I've said, you listened to what somebody else has said, you've done all these things in your head, and you've gone, do you know what? I don't think Nvidia is that good. I think it's all going to go down the toilet. Then yes, you probably should sell it and buy the S&P because that's definitely going up. I can guarantee that. Ups and downs in between, here, there, but ultimately it'll be up if that's your belief. But if your belief is it's all going to go up, leave it alone.
I mean, it sounds like he kind of wishy-washy. You don't understand. Pick a strategy you want to do, like Martyn did, like I do, like some other people do. Stick to your strategy. You can redefine your strategy on the way through your journey, but understand what you're doing in the stock market, how you want to do it, how you want to make money with your own money. The way I look at it. Don't be wishy-washy. I'm going to do this way. Oh, no, I hear this way over here or over here is better. I mean, stick to a strategy. You can redefine it. You don't like how your strategy started out. Know what I did? I started out with buying Coca-Cola, J&J, getting them small dividends before I looked into high-end dividend. Just started about 2 years ago. But I found them out about April, but I did research for 2 months before I even got into them. Do your research, people. I mean, Martyn give us good news and information, but you got to do your own research. You can't rely on somebody to do your own thing. I mean, the way I look at it, yeah, I listen to Martyn. I disagree on a lot of things you say. I agree on some things. I mean, that's human nature.
And also, you make some good points. And also, what's right for me isn't necessarily right for you. It's not that I'm wrong. No one can say I'm wrong owning the S&P. No one can say I'm wrong. However, you could say you could make some more money somewhere else. However, you don't know you can make money somewhere else more until you have, because that stock might not work out. No, I mean, people message me every day. It's unbelievable. Some of the comments I get, people predict, think absolutely 100%. I get comments like, this stock 100% is going to the moon. It's going to make $1 million. I get these comments, thousands of them. Emails, messages, direct messages, you name it. Thousands a day. Everyone seems to know what a stock's going to do. No one knows. I like to use the phrase, whether you're Jimmy Buffett or Warren Buffett, no one knows whether the stock's going up, down, or sideways. It's all Sfakazi from the film Wolf of Wall Street. And that's it. At the end of the day, there's no right. And there's some principles to adhere to, some basic fundamental principles. Zach's 8 makes the point, not paying your bills in the US on time will damage your credit score. No one will give you a loan with bad credit. No one will give you a loan. You'll probably still get a loan, but you'll get a loan at a higher rate.
Well, I did get a loan from a car at 0% credit rate, but it was at 2.9.
Yeah. But you are not missing your payments, are you? You're paying ahead.
No.
What you're doing is a little bit harder to understand for most people because most people just pay the bill and you're paying it. It's not you're paying it behind. When you first explained it, it sounded like you're just chasing the credit card. You're just throwing, you're not. You're paying ahead of the game. And again, that's why I'm pretty confident if I calculated it, potentially, I think my way would give me a bit more money, but it's so small, it doesn't matter. What's important, I'm going to end on this. What's important is Fight is paying his credit card. He's keeping it at zero, not the balance overall. I get it, but he's not paying any money because he's paying ahead. He's not paying interest. That's what's important. What's important is he's not paying interest. How he structures his routine, daily, weekly, monthly, wait till the bill comes in, da-da-da-da-da-da. What's important is he's not paying interest. We all have our own ways of skinning the cat, but as long as we skin the cat, it doesn't matter how you do it. At the end of the day, nothing against cats, by the way. But so, we
don't eat cats here on this show.
They're eating the dogs. They're eating the cats. They're eating the pets of the people that live there. We've all seen it.
I am working on a video with Barbie with Meet. Meet who? What's that guy's name?
Meet Kevin.
Yeah, Meet Kevin. Yeah.
No way.
I'm going to use that video to make another video on it. Yeah. That would come out in October.
Look forward to that. Another little plug for yourself there. I did notice you've now gone up to, you were 648 when we started this. No, 644. You're now at 658. You gained 14.
Well, I've been gaining on my own for the last month about 78 subscribers without even plugging it.
I'm not saying you didn't. I'm just saying we just did that now.
I know.
Fantastic. I'm really, really pleased for you, mate. Right. We'll have to let you go because I have to wrap up the show. Right. The markets are about to turn green again. Always appreciate your comments. I will be interested to see at the end of the year where your portfolio goes and when you pay tax on it. It'd be interesting to keep dissecting it. But it's another way of doing it. There's no right and wrong way. As long as you're doing what's right for you and you're happy with the result, do what you carry on doing it. You're obviously very happy and you're making money along the way. Thank you ever so much, Fight. Appreciate you.
Thanks.
Cheers, mate. Cheers. There you go. Fight Channel just called in. Absolutely lovely. If you want to be part of the show, you can go and check out Fight Channel with his Barbie doll videos. Lovely. Right. Okay. Now then, I think we'll wrap up the show. Did we get 100 likes? We got 97 likes on the show. We didn't quite make the 100. But there you go. The portfolio is trying to push back up again. Let's read these comments. What saves him is the fact that he has a business, an SEP account. I've built a dividend model over 15 years. I'll take 9% growth annually or 132 grand. Dividends are sleeper money, but that's my strategy. I got something good starting today. I'm sitting in Doc's office. Now I'm still waiting on him and listening to you. I got something good started today. I'm sitting in Doc's office. What's good? What started today? Not paying the bills. 120 grand for Nvidia isn't a loss in the long run. Look at Tesla. Over 250. Absolutely ridiculous. Let's have a look. Absolutely ridiculous. Go and have a little Tesla, shall we? Where are we? 253 right now. Let's have a quick look at that before we end the show. What if it had gone the other way and he suddenly owed his losses back on his home? What if it had gone the other way and he suddenly owed the losses back on his home? Indeed. Thanks to both of you for responses to my earlier question. You both would probably need more detail on my strategy, though. Yes, we absolutely would. You need to call in. You become a member. You can be on the show. Springfield. Yeah, in Springfield, they're eating the cats. They're eating the dogs. They're eating the pets of the people that live there. I love it. I love it. Great entertainment, that. Right. Okay. I think we can wrap up the show. Any final comments? We are in general public mode. 97 likes. 99 likes. We got 99. One away from being suggested on YouTube. Never mind. Okay. I'm going to go. So, I've got my China and my VU video to put out. Let me send everyone to the extra channel. Here we go. Let's send everyone to the extra channel. Here is extra. Extra. 100 likes. Hey. There you go. So let's do day trader of the day. 101. Thank you, guys. Appreciate that very much indeed. YouTube will suggest this video out now. Brilliant. All right. Thank you ever so much. Let's do day trader of the day. Let's see where we are. Let's clear the boards. I am flat. 0%. I mean, it's not even anything to shout about, is it? 0%. Let's see who wins day trader of the day today. Let's bring in the music. Let's see who wins. Away we go. Doo-be-doo-doo. Shidoo-be-doo. Let's roll the credits. Stars of the show today. Subscribers, Crack Tina and Joey, thank you very much for your support. Really do appreciate your support today. No super chats today, no new members, nothing like that. Pretty quiet day today, really. People think that green days are the best. They're not. The red days are the best. There's not much to say, though. Going sideways. Up 0.11. David Ewan, congratulations. Oh, 0.35. Stephen Lewandowski, Ernestus, 0.36. 0.36. Up 0.02. Rick McGrath, 0.36. Ernestus comes in the lead at the moment. Down 0.09. Ivan, no worries, mate. I'm going to turn it green. I'm going to turn it green to end the show. We're going to be green in a minute. I'm loving it. I think the winner is 0.36. Anyone beat that? Let's go over now to the extra channel. Did we get any new members to upgrade? Doesn't look like it. The extra channel is where we're going now. Go on, turn green. My new combined account up 0.74. Zach's 8.74. I'm going to call that a win. Thank you. Thank you for your honest trades. We love it. We love it. We love it. We love it. And let's move that over to there. There you go. That's what that needs to be. Thank you very much. And give him a thumbs up as well for his honest trades. That's it from me. Thank you ever so much indeed. I'll see you back. I'm down, Martin, not up. Or Ernestus. Oh, down 0.36. I apologise. I got it wrong. But the winner was definitely Zach Zay. Anyway, congratulations to you. That's it from me. Join me now in the extra channel. I will see you back shortly. Look out for the new videos on China and the S&P 500 dividend payout. Until then, as always, take care of yourselves and each other.